Well, the budget session of Parliament is kicked off with the President's address. We are just 3 days away from Finance Minister Nirmala Sitharaman's 9th consecutive budget, history in the making. From revamped income tax slabs to a brand new labour code, the government has unleashed a slew of reforms in the last year. So what can we expect from Budget 2026? Staying the course on fiscal discipline, sustained infrastructure spending and boosting domestic manufacturing are the key market expectations. Almost all brokerages expect the government to peg nominal GDP growth near double digits. Only Jefferies is expecting nominal GDP growth to be below 10%. Brokerages also expect the government to stay the course on fiscal consolidation. A majority predict a fiscal deficit projection of either 4.2 or 4.3% for FY27. They also expect the government's capital expenditure to rise from just over 11 lakh crore rupees last year to more than 12 lakh crore rupees in this budget. Well, those are some of the expectations that the market is building in. To discuss what we should look forward to from Union Budget 2026 and what the Indian industry is hoping for, we're joined by the top brass at FICCI, Anant Goenka, the President of FICCI, Puneet Dalmia, the Vice President of FICCI, and Rashesh Shah, the former President of FICCI. Gentlemen, appreciate you joining us here on the program. Anant, let me start by asking you, last year, the direction of the budget was very clear. It was more focused on spurring consumption, giving tax benefits to the consumer. Do you believe that we're likely to see a continuation of that or a reversal back to more capex?
Yes, from FICCI side, we had a pre-budget survey, and the three asks that are coming out from industry is: one is continued focus on manufacturing, focus on exports, and a continued thrust towards growth with the various FTAs and opportunities that are getting signed, and a thrust on infrastructure spend. So these are the three larger expectations that came out of our pre-budget survey. There is overall fair amount of optimism with growth expected to be between 7 and 8%, and the fiscal glide path also to be maintained at the targeted 4.4%.
Let me pick up on those themes that you spoke of that the FICCI survey brought up, and let me go across to Puneet Dalmia. Puneet, in specific next steps now, we've also seen a flurry of activity from the government ahead of the budget, many measures being taken, including, for instance, the notification of the labour code, which was actually brought in many years ago, the operationalization of that innovation fund as well, which was again a budget announcement 2 budgets ago. Puneet, from an export perspective, while we've seen these deals being inked, none of them are yet operational. They'll only be operationalized in 2027. That's the EU deal, and hopefully the UK deal will be operationalized in this year. What would you expect on the export side from the budget to provide some more sort of momentum to Indian exports?
I think, the fact that the EU deal has been announced recently is a, very massive opportunity for India. It is unlike other deals, and it's unprecedented in terms of scale. India has just 3% market share in the EU imports. And I think it's a $6.6 trillion opportunity with, where across labor-intensive sectors, also India has phenomenal, possibilities. So apart from scale and growth, it also gives India diversification. I was talking to many of my friends who are already diversifying markets. And, this is a, unprecedented opportunity. Yes, it will take some time to play out. But I think, businesses are built for the long term. And
yes.
I think people will make very serious investments in the supply chain. And finally, I think this is a sustainable deal because it's based on shared values of, democracy, rule of law, and civilizational states. So I think I'm very excited about the fact that this is an opportunity which offers scale, growth, diversification, as well as shared values. So it's sustainable in the long term.
Yes, those are, of course, those are important factors as far as the India-EU deal is concerned, Puneet. But, coming back to the near term, the specific ask that FICCI has made of the government, what would you like to see this budget deliver on?
Look, I think, budget is a statement of intent. Budget is a statement of where the government wants to focus. I don't think, we can expect anything in the immediate quarters, like what will happen in Q1 or Q2. I think government has already done a lot to spur consumption domestically. I think government has reduced GST. We have also reduced income tax for under 10 lakh slab. So I think domestic market is good, and a lot of export rupee is falling, which is making India's exports more competitive. So I personally think that the macro opportunities are, getting created. But just in terms of specifics, I think if government just continues its momentum to implement these trade deals sooner and ensures that the India remains cost competitive, I think it will hold us in good stead over the long term. There'll be some hiccups along the way, which all of us as entrepreneurs have to deal with.
Rashesh Shah, let me bring you in. The ask, of course, of the capital markets is a change in taxation. Whether or not it will happen is a different story at all. Are you going into this budget expecting anything on that front?
No, I think overall, I think the capital markets are in a good place. Of course, FIIs have been selling. There has been pressure on the rupee and all that. But overall, I think last year was a difficult year. But every year cannot be a great year for capital markets. So I think a lot of the investors are absorbing it. I do feel that government needs to, by commentary and by action in the budget, need to bring the animal spirits back. I think the India-EU deal is a great, it has improved sentiment a lot. And along with that, I think in the budget, if the government continues to push, I for one feel allowing the fiscal deficit to slip a little bit by government spending more on infrastructure may not be a bad thing, because that will give it a fillip. And with inflation being low, we can take the risk. Yeah. Of course, the rupee may fall, but I think we can allow that because that will improve our exports. But we do need to get the animal spirits going, and the government spending is a key catalyst for that.
Yes, government spending has been a key catalyst for many budgets now. But, Anant, going back to this animal spirits business, I mean, we've been waiting for the animal spirits to be unleashed for the last several years now. And the government keeps saying that, look, we've done our part. We've cut GST. We've cut income tax. What about you guys? What are you going to do?
Seeing a big shift, I'd say that post GST 2.0 from October, November, we are seeing growth levels in many industries, double digits, strong double digits, 20% plus rates, levels of growth. And as a result of that, utilization of capacities is certainly going up. And I'm seeing a shift clearly towards much higher private capex. So I do believe that that will continue. A few areas that FICCI has suggested to the government that we can do more on. One is continue the momentum on the electronic space by setting up a mega electronics park along the lines of what's happened in China, where the entire value chain is closely knit together. Second is with various wars being led happening in the last year, can we increase spend on defense manufacturing, especially on the technology and research side? So an increased spend in defense. And the third is critical minerals tailings program. Again, critical minerals are very important. We are not naturally very rich on that. So on the tailings, is there some recovery that can be done? And can we have a specific program around that to make sure there's higher recovery?
Well, important points, each one of those. An electronic hub, an electronic park may perhaps be an idea that the government will toy with. We don't know. This has been the big success story. The Apple story has been the big success story for the Indian export sector. But Anant, you talked about defense, and I was having a conversation with the defense secretary, and he was of the opinion and of the view this is going to be, by the way, the first budget post-Operation Sindoor. So a higher defense allocation is expected. You've seen defense stocks rallying ahead of the budget on the back of that expectation. Critical minerals. But one more aspect, and I want to get both Puneet and you to comment on that if you'd like. The nuclear sector, the last session, the government passed the Shanti bill. Both the renewable energy minister as well as Mr. Vaishnav have been talking about, micro reactors, small modular reactors. Do you expect measures to push this sector in this budget? A PLI scheme is being spoken of as well. Anant, I'll start with you.
Right. I think it's very timely, particularly with the growth in data centers coming in, and suddenly India possibly being short of power just because of the amount of shift towards AI. So this is a great momentum that has been started towards opening up and looking at partnerships on the nuclear side. I think it's still very early in terms of the research technology that is there to really make it live. So whether it will come in this budget or we wait for technology to strengthen, and maybe in about a year's time we'll see more incentives and goals towards making nuclear happen. I think that is still to be decided.
Yes, that perhaps could be a start, could be made in this budget. We will have to wait to see. But Puneet, any out-of-the-box ideas that FICCI has suggested to the government that you would like to see the government take forward? You know, we saw that jobs focus with the internship schemes and so on and so forth. We had seen the Research and Development Fund in the previous budgets. Any out-of-the-box idea that FICCI has put on the table?
Shireen, I think, there is a lot of the, breakthrough ideas that the government has announced has to find its way on the ground. So like, I think you just spoke about this R&D budget. I think ANRF has been formed now, and even RDIF, has been formed. And I think it's been headed by a, very strong private sector person. So I think just to ensure that India plays the innovation game globally, a lot of more work needs to be done into how this capital will be allocated, who will be the secondary level fund. So I think just executing on some of the ideas to increase India's R&D spend, which can be linked to national priorities and where we can get solutions which really have tangible impact on the ground, is very important. And I personally think that just some of the things which we have already started, doing more of this faster will yield a lot of results. And I think, one of that is also, just ease of doing business, decriminalization of various codes. It will just unleash animal spirits much more. So I think some of the things just need to be executed deeper and faster, in my view. And I think that will really get India even more momentum, than what it already has.
Rashesh, coming back to you, we've seen the government move away from setting high disinvestment targets, which were then not being achieved. Do you expect anything on that front, any change perhaps, bolder statement perhaps on disinvestment, asset monetization, anything you believe that we could perhaps hear on IDBI Bank, for instance, and even bank consolidation in general, because the finance minister has spoken about it publicly in a conversation with me where she said it's work in progress. Do you believe the budget could perhaps take things forward?
Yeah, I would expect, I think IDBI is on the cards and there has been quite a bit of conversation on that. So something on that lines, along with the consolidation and driving efficiency in the PSU banks, maybe also something on LIC, some disinvestment in LIC would also be on the cards. So I think headlines would be around that. But as I said earlier, I think what government, earlier you said government has been spending for last few years and the private capex has not come, which is true. But if you look at the drive for fiscal consolidation has also impacted overall growth, especially when the private sector capex has been slow. Exports may face some headwinds in the coming quarters because of US. So I think it's very important right now that government allows the fiscal consolidation to be on pause for some time, start spending money. It might drive yields up a little bit. It might drive rupee down a little bit. But I think it's a worth risk taking because inflation is low and people need some catalyst. And the catalyst will have to be the government, because I don't think the private sector is not aggressively investing because the demand has been muted. If you look at capacity utilizations, they are still not inching up. So I think that is going to be very important.
Well, so far, we've seen the government being steadfast in maintaining its fiscal deficit glide path and its fiscal deficit targets. Don't know whether we're going to see any departure from that. By the way, gentlemen, there's also going to be another important event to watch out for, which will be the release of the 16th Finance Commission report, which will coincide with the presentation of the budget. What will the tax devolution to states be? That's also going to be a key factor to watch out for. What happens to centrally sponsored schemes? All of that will also have to be factored in as we look at the impact of the budget. Gentlemen, before I let you go, a quick budget poll. Anant, I'll start with you. How long do you think the speech is likely to be? Over an hour? An hour? You're on mute, Anant.
No, I think it'll be over an hour.
Over an hour. Puneet, a little bit more
Over an hour.
specific.
Over an hour.
Over an hour. Okay,
Yeah,
Rashesh.
I think it should be more than an hour. The commentary is going to be very important. So I do hope that she elaborates on quite a few things.
Well, over an hour, that is the FICCI consensus on how long the finance minister's speech is likely to be. By the way, it was a very short speech the previous year, not the last budget, but the budget before that was a very short speech. But of course, over an hour is what FICCI is voting with. Remember, 11 a.m. is when Finance Minister Nirmala Sitharaman will rise to present her 9th consecutive budget, creating history in independent India. Gentlemen, we will tune back in on Budget Day, which is a Sunday, so it's going to be a working Sunday for all of us. But look forward to more conversations then as we decode the fine print of Budget 2026. Many thanks for joining us here this evening. We will head into a break, but when we return, an exclusive interview with Sudarshan Venu of TVS Motor on the India-EU free trade deal. That and more when we get back.